Is China's economy the world's second largest, on the brink of a lost decade? A quick look at the recent events paints a rather gloomy picture. The stock market, once a symbol of China's meteoric rise, is now marred by a downturn. Capital outflows are hitting record-breaking levels, with almost $11 billion being pulled out over a span of 13 trading days. The underperformance since the pandemic has been stark, stirring up comparisons to a ticking time bomb. This economic wobble isn't just about numbers, it's about people, about society. High youth unemployment is a pressing concern, leaving a generation of young Chinese in limbo. Demographic issues are adding fuel to the fire, with an aging population posing significant challenges. Then there's the elephant in the room, the heavy debt in the property sector, a sector that accounts for a whopping 30% of China's output. With this backdrop, what could be the possible lifeline for this stumbling giant? In response to the economic challenges, the Chinese government is considering a massive rescue package. This is not just any ordinary package, but a colossal $278 billion plan to breathe life back into its beleaguered economy. Yes, you heard it right. $278 billion. Now, where's this money coming from, you may ask? Well, the Chinese government is thinking out of the box and looking beyond its borders. They aim to mobilize this substantial sum from offshore accounts, turning overseas money into a formidable stabilization fund. This isn't a common move, and it signals the seriousness of the situation, but that's not all. In addition to this, the government is also planning to invest $42 billion of local funds in onshore shares. This is a clear attempt to prop up the stock market, which has been on a rollercoaster ride of late. The hope is that this capital infusion will provide a much-needed boost to investor confidence and stabilize the market. Now, these measures could come into effect as soon as this week, and their immediate impact could be substantial. If successful, they could stimulate the economy, boost the stock market, and alleviate some of the current pressures. However, they are not without risks. Pumping this amount of money could lead to inflation and other economic issues if not handled carefully. But what could be the long-term implications of such a significant move? A rescue package of this magnitude is bound to have far-reaching consequences. Let's delve into the potential impact of this colossal rescue package. On the bright side, this initiative could be the catalyst to reinvigorate investor confidence. With a seeming fortress of $278 billion, the stock market may find its lost stability. This stability could, in turn, help stimulate the economy and set it on a path to recovery. This is especially important considering the high stakes involved. Remember, the struggling real estate industry, which contributes to about 30% of China's output, is on shaky ground. A rescue package of this scale could potentially provide the much-needed support to this vital sector, and in doing so, help stabilize the broader economy. And let's not forget about the potential for offshore money. The plan to mobilize such a large sum from offshore accounts could bring in fresh capital, further bolstering the stock market and, by extension, the economy. We could also see $42 billion of local funds being invested in onshore shares, providing another boost to the markets. But it's not all sunshine and roses. With every measure of this magnitude, there are bound to be risks and concerns. One major question is the sustainability of these measures. Can the Chinese government maintain this level of financial support in the long run? And if not, what happens when the support is withdrawn? Then there's the issue of increased debt. As we've seen in the past, large-scale financial interventions often lead to an increase in national debt. If not managed carefully, this could exacerbate the very economic problems the rescue package is designed to address. And let's not forget the potential for unintended consequences. In their haste to stabilize the economy, could the Chinese government inadvertently create new economic problems? Only time will tell. Indeed, the proposed rescue package could be a game changer, but only time will tell if it's enough to steady the rocky boat of the Chinese economy.